I'm Roger Montgomery from Montgomery Investment Management, and welcome to this week's Video Insight. Today we're talking about cloud computing and a small cap opportunity in the space. The cloud is where, for example, computing power, software delivery, video and music streaming now resides. Where once we purchased Microsoft Office, which contains Excel, Word and PowerPoint on a disk, today we access it through the cloud, paying for a subscription. The cloud has permanently transformed the unit economics of delivering software and technology. Universal Music, Sony and Warner once had to burn an album onto a CD, package it in physical artwork and a plastic case and ship it around the world. Today, they simply upload a song to the cloud. And because access is so ubiquitous, more songs are purchased today than they ever could have been when physically delivered. The revenue models and profitability of businesses that can leverage the cloud are beneficially altered and permanently so. And the greatest potential benefits may just be conferred on Australian small companies, because for many of those companies, the change is most profound. You see, in the past, technology was a competitive weapon, best leveraged by large established players that could afford the heavy upfront investment and maintenance costs required and high costs to maintain. It previously was a scale game that made the economics of technology work. Today, that's no longer the case. Today, technology is available as a service. There's often no upfront cost under the new user pays model. In this new world, scale becomes a burdensome, overhead-riddled disadvantage. And it's among Australia's small companies where much of our nation's innovation lives. The IT capability, once the domain of big companies, now allows small, more nimble, innovative companies to test an idea, learn from it, and then quickly scale that idea to exploit the opportunity. Today's cloud-enabled small companies are tomorrow's market share takers. If you haven't already guessed, at Montgomery, we currently believe cloud will be a major catalyst that will see select stocks in our small company universe wrestle market share from sluggish or immobile big caps, and those that are too big to change but no longer too big to fail. And as you can see from this chart, there is a long runway for growth. Enterprise adoption of cloud services today is where digital music was 20 years ago and where smartphone adoption was a decade ago. It's still very early for this theme, and the growth is structural rather than cyclical. By that I mean it's less exposed to the economic and business cycles. With a blank sheet of paper and access to low-cost technology tools, many companies are merely at the beginning of an innovation cycle, one with a very long tail. One company delivering the framework on which this innovation cycle is being built is Macquarie Telecom. For the Montgomery Small Companies Fund, it was the first investment we made, and it remains a core holding today. Because of its exposure to structural growth, we believe it's both a defensive and an exciting growth stock, irrespective of how COVID plays out. All the data that we rely on today to run the digital economy has to live somewhere, and home is a data centre. Macquarie Telecom is a data centre operator, and its business is expanding in a very big way. The company is now developing a new data centre in Sydney, and it's going to be a meaningful driver of profit growth for several years to come. The new Sydney data centre will increase the company's DC capacity in stages from 14 megawatts today to 50 megawatts. The first stage is scheduled to go live in January next year, just 4 months away. Stage 1 is an incremental 18 megawatts, and to give you a sense of the significance here, we estimate Stage 1 could deliver $40 million of EBITDA. To put that in perspective, Macquarie Telecom generated EBITDA of $66 million last financial year. The second stage could deliver another $40 million of EBITDA. What we're excited about, apart from the fact investors in the Montgomery Small Companies Fund benefit, is that the development of the company's revenue and profit opportunity and growth can be internally funded. According to our analysis, there's no need for equity to fund the CapEx. Macquarie Telecom's data centres are 30-year assets and at full capacity generate high returns and long-term sticky and visible cash flows. Today, at $45.50, Macquarie Telecom trades on 13 times EBITDA. While our estimate can change, we currently believe intrinsic value is approaching $70 a share. Keep in mind the information provided is general in nature and is not a recommendation to buy shares, which must only be done after seeking and taking personal professional advice. You should also keep in mind our view may change at a moment's notice, and we may sell our shares without informing you. We'll be back soon with another stock video. In the meantime, be sure to follow us on Facebook and Twitter.